My name's Donna Klein. I'm here today with Patrick Lafferty. Pat is a co-founder at Capital Trading Group, which is an introducing broker with the CFTC and a member of the National Futures Association. Pat, thank you for joining us.
Thank you very much.
I know you've been in the business of futures trading for 15 years, but Capital Trading Group is relatively new. It's primarily involved with managed futures. Tell us a little bit about the growth of this industry over the past decade or so.
The growth of the industry has been nothing short of amazing. In years, it's been experienced the fastest growth rate of any investment asset class, 700% to be exact, over the last decade. Since 2002 alone, which on the chart you're showing, you can see the steepest part of that curve, that line graph, the industry went from $43 billion under management to last year over $230 billion.
This is an extremely regulated industry and one that's been growing virtually exponentially. Not surprising given the performance of managed futures. I'm showing here the weighted CTA index, the blue line, versus the performance in underlying equity markets, and it's unbelievable.
That chart's very dramatic, of course, and part of the growth has come, and the interest into managed futures has come from just the continuing education that the investment public is. The more they find out, the more they like, simply. And I mean, the most obvious benefit is how managed futures added to a traditional portfolio can enhance that portfolio's performance overall and also reduce a portfolio's downside exposure.
Now, this you mentioned that, and I'm showing a chart of a traditional portfolio that has included managed futures in it, and it has, from the chart at least, it shows an improvement in overall returns.
Yes, that chart specifically, you're right. The light blue in the foreground is a traditional 60% stock, 40% bond portfolio, which everybody's pretty familiar with. By simply reallocating 30% into managed futures product, and that's just a weighted index that's been used for this, the purpose of this chart. That 30% allocation increases the overall performance in almost every economic cycle and condition over the past 20 years. Specifically, the performance increased about almost 20%.
And this is not just commodity allocation. This is actively managed commodity funds that are long or short commodities. I think that's something that maybe most listeners might not be aware of. This is not merely putting money aside in X commodity.
That's right. These professional traders, and we call them commodity trading advisors, or CTAs. They have the ability to diversify into just about any global marketplace and take advantage of about any economic condition or cycle that we could encounter. And that's really because they can be long or short, which means really to the layman that they can profit from rising or falling market environments.
That seems to be the ticket these days in any case. And that kind of brings me to what your group does, Capital Trading Group. You help people find the CTAs that are best suited for them.
That's right. It would be a pretty difficult task, almost a needle in a veritable haystack, if you were to just try looking for a CTA on your own. But our company, with interviews with the clients, finding out what their needs are and their goals for their portfolios, we scrutinize and through rigid criteria go through the 1,750 CTAs that we track and audit, and are able to recommend and put individual investors with the CTAs that will be the best for them.
Well, Pat, you know what? I think this is great information. I welcome people to contact your office, but also to tune in to some other presentations when I'm going to ask you some more questions about the details behind managed futures. Thanks very much.
Sounds great.
Yeah.
Thank you.
Bye.